Good morning, my friends, and welcome to the Breakfast Club. It's Monday, October the 6th, 2025. I hope you all had a wonderful, safe, healthy weekend and no violence. I hope you're just existing as people and loving and getting along with each other. That's what we need to do. Just love each other. Good morning. I love you all. Welcome, welcome. All right, let's look at the markets today. So let me just make sure I've got everything up and running. What I need is this one. Well, I've just updated my computer, so things might be a little slow here. Oh, there we go. There we go. We are up and running. It took me a bit. Okay, so from this weekend, I was discussing about looking for a long opportunity off of that daily level. If you remember my Sunday review, we're looking for it to open up, come back, tap this daily fair value gap, and then just start running higher. And if it broke through that mean threshold of this candle, or this one right here, if we broke through the mean threshold of that candle to the upside, I'm looking for continuation. So you're looking for any opportunity to get in on a long as soon as it comes back and taps that level there. So if we look at the opening here yesterday, this was the open. Came down, tapped right on top of that daily level right there. Look at that, right to the pip. Nailed it, and then started going longer. So then what you're looking for is an opportunity to catch your long. So either you went in long there, put your stop loss below the low, which would have been quite far down, and then wait for an opportunity like, do we clear this high? That breaks market structure to the upside. And then do we come back down and use this breaker as support? Use breaker as support, and then continue going higher. And then you're aiming for the daily rejection block, half of that in the old high. And obviously we've nailed the old high, no problem. No problem. So as soon as that old high, like I discussed in yesterday's pre-market, as soon as you see that old high, you start to look for now signs of a reversal, or if it just continues to go higher, then so be it. So we're looking for signs of reversal. So as of this morning, the reversal or change in direction that is noted, and then you have to start picking out the range that you're in, sitting right here. Okay, so at 8:13 this morning, if I was up, we could have caught this. You drop below it right here, change in direction. So we have change in direction right there. This now becomes an inversion. You come back into it and you want to go lower. You get another opportunity to come back into it. We're going lower. So you don't want to see anything trade back through that, right? So it trades back into it again. And now we're heading lower. We're inside this. Look for this candle here. These equal lows. You trade through them, come back to them right there. Then we're looking for this candle here. We want to see it trade through it and come back and use it as support. It does. It comes back, uses it as support, goes lower, extends the range, and then we have a change in direction right here. It's a small little change in direction and a small little range extension. So it's all in one candle. We ran right through it and then took out the high. So now you have to wait. You got an immediate rebalance right here. Came back up inside, went lower, took out this. This is what we're looking for right here. We took out that level, came back inside it, and then extended the range again down here. Now we got another change in direction. And this order block, this, look at the candle to the left of it. You'll see it's a bullish candle. You came back inside it, ran higher. We are in this premium level here. High's already been taken. We are then reversing, so you're kind of banging around between this and this. We come through this level, you come back into it, and this order block, big ugly wick there, and we're stuck at this mean threshold of this one, that this last bearish candle now. So I'm really between here and here. I'm still inside this range, but you know, this one's already been extended, so we're going to go one here. You have to lose it to this candle to the upside if you want to keep going higher. We have equal lows below us now, and we're into some chop. So wait for an extension. Wait for market structure shift here, above or below the market. That's what I'm looking for there. On a 5-minute. Remember we were talking about on a 1-minute chart, that little high that's taken. Once we breach this high right here, which is right here, you wait for the first opportunity to see the change in direction, which happens to be right in here. Right in here. So if you can't get that one, look for this one. That's the one you enter in on short this morning. So that would have been the short. I don't know if Hadi caught that one or not. Good morning, Hadi. Hans, Russell, good morning. JP, good morning. Asia stole the move. Did you catch this one this morning, Hadi? That looked like a really nice one. That's just like right before the open. We're going to put his open on here. There's 6 a.m. a candle. Oh, get rid of this. This is all old stuff. Let's start from scratch here. Wait for this structure break here if you're going higher. You have a change in direction here, and then we traded below it. Now we traded back above it again. So wait for structure shift. Craig, you caught it short? Look at you. Look at you go. Good morning, Abs. Yes, good for you. Out now looking for another short. Abs, thanks for the weekend review, Darren. I missed it, but saw it last night. Great analysis. You're very welcome. I have to trade my funded futures. Nicely done, Craig. Good for you, buddy. Yeah, I enjoyed that little analysis this weekend. It was nice. My wife went out for a little rare weekend breakfast with her friends. So it's like, oh, good, I get to get on there and do some analysis this weekend. All right, so remember, we have tagged this one, but we have not reached this one up here, so it hasn't been pierced yet. So if we do get a weird run up, look for this level here to be retested. But we're in this consolidation right now, so let's not sweat this. I have to trade my funded account. So where are we at here? ES. Let me get rid of this one and put, oh, I put the wrong, clicked the wrong one. ES. I was going to do an ES analysis as well, but let's do I think Derek was saying he didn't want to do any more NASDAQ just because it's so choppy. So let's start looking at some ES stuff here. That's nice. And you're right in the middle of that huge range there. You're just up in the premium level. You've just reached this immediate rebalance right here. And you've just come back and hit the high of the CIBI that's closed in now. So you still got to wait and see how that acts in there in an hourly chart. So this premium level's been hit. This CIBI has been filled. I'm going to wait for market structure shift here on the 15-minute. Oh, that's a nice little place short right there. We've wicked below the low though. You want to see if we, now you start digging down in here. Now you start looking for a reversal right here on a 5-minute or 15-minute level. So this is the 15-minute box I'm looking at here. Then 5-minute. So what I'm looking for is a reversal right here, all the way down to a 1-minute or 15-second, looking for a reversal inside this box. Just hit the box there now. There's a little imbalance right here. Now we're above that imbalance. So that would have been the first one. I'd like to have seen it just run up to that, roll over and come back down. But the 15-minute level, we're tagging that. So now we're looking for a reversal. We're already above. Yeah, no, that's going to go higher. So we have a deeper run into this 15-minute. If we start getting back through this mean threshold here, and get back through the candle, 6782. And I'd be looking for a little lower, but right now this half of this, and then start going higher again. And then we're looking for, on a 5-minute chart, you're looking for a run up into this level. This one here first. So it would be 67.87. And then look for the consequent encroachment. And we're looking for any reversal there in a 5-minute. So let's have a look at a 1-minute chart now. See, we got a little change in direction. Above that, you hit all the way into the mean threshold. You traded, you traded through it. So you reach for this discount array. Body respects it right here. Trade above that high now. You come back into this candle, pushing higher, taking out this high. You want to come back into this candle, or this, we got this kind of overlapping candles here. Mean threshold. Anyway, the low of that was, I was sitting right here at 6785, and the low in that candle 6785. So we're right onto the bottom of this, and now we're pushing higher. So we're looking at that on the 5-minute chart, wants to go higher. The 15-minute chart, that's the level we're looking for a reversal in. So right now we're still climbing higher into the 15-minute box. So looking for 67.8725. And then 67.88. What's oil up to? Oily oil, look at there. There's your reversal. Traded back into it beautifully. Craig, you probably caught that as a big killer smasher, 61. And start heading for, there's our bull trap. It ran, we're looking for an opportunity to get in here. You couldn't. So you're looking for the next opportunities right here. Your long is right there. And you're running all the way up for a fill of this, 62, 70%, whatever, using your take profit model 1, all the way up to the bull trap. Bull trap holds you right at rejection block, snaps back, and then we're looking for any chance to see a reversal back into an area that never got a chance to get hit. And here it is here. It gets hit, then it starts to run higher. So now you're inside this range. Pull your fib tool. As soon as you get in on that, then you're looking for 50, 62% of that range. And then if it reverses on you, you got to wait for this level right here at 61.24. 61.23. If that gets broken to the downside, use it as support to keep coming lower, and then wait for this bull trap to get taken on the upside before you go from there. At least that's what I'm seeing anyway. That's on a 5-minute chart. The 1-minute chart, nothing here. Right here, there's your long. Bull trap, breaks through the bull trap, uses the bull trap as support, goes higher, looking for the next bull trap above you here, and these SIBIs. We have a change in direction, or within market structure shift would be here. Nothing. You want to see it trade above that one more time? It does. It comes back into it, runs higher, right into the next bull trap. Do we get through it? Nope, we get a change in direction. Another change in direction. Trade back up inside it. Once we close below it here, you trade back up inside it and go lower. Break market structure to the downside. Here, you don't get a chance to get in on it there, but it's the first fair value gap that you see form below a little swing point. Then this is the institutional order flow entry drill for continuation on the downside. Inside the larger range now. Pull your fib tool on here from here to here. And you look for take profit model 1. And there's 50%. Pay yourself at 62%. And she comes back and gets you, closes you out at 50. You got an internal range liquidity hunt. Wait for the reversal. I tell you that take profit model 1 will save your ass if you're on the wrong side, because it invariably will come to at least 50% for you to take half your trade off and put your trade at break even. Just think about that. That's always a safety feature, right? Of the take profit model 1. I looked at that as a way of protecting your money as quick as you can. You may not get the big lines portion of the trade, but you do get a little more safety and security in that take profit model. And then I kind of expanded them, and then you get much better opportunities to be a little more risky. And like there's 4 or 5 different take profit models, and they get increasingly riskier as you use them. But they do provide you with a lot of opportunity, from safety to maximum profits. And in this case, you would have got maximum profits. You would have got 60% of that trade off right there at 62%. So even that little entry from there to there would have made you money. Anyway, crude oil is now on a little turn. You're back inside this range here, and you're back inside this range here. So you ran from high to low, change in direction. You don't get an opportunity yet on that, so keep that in mind. Will we come back and revisit this? We break through it. We come back into, look at the candle to the left, the bullish candle to the left. We break it on a high. We come back into it beautifully, and then start running higher. Take profit model 1 that you used coming down. You can use the same one going up. Here's your bull trap. First one's here. You want to see if a body gets above that. Notice how a body doesn't even get above that. A wick just wicks into the next one. And then we want to see a change in direction. You don't see nothing here until we get, and you're back inside that range more than 50%. So there's nothing really clean in here. Just that revisit that we talked about, coming back into that level now. So now, are we just going to use this level for a little bit, bounce around? Are we going to break through it, come back, find support at it, start running lower, and dig deeper into the one that we never got a chance to catch because it just took off from here earlier? So keep your eyes on that little box right here. See how that makes a lot more sense when you look at it as what level was used in the past and what wasn't, and what's the likelihood, if we're getting a reversal, that we're going to come back and potentially revisit this. Well, if you see an opportunity to get short, start gunning for that, and or use your take profit model 1 for protecting your money. Need to close with a 15-minute fair value gap from October. So here's your 5-minute. You're inside that, or retapping it. Now you want to see this start to take out a high, or see if we close below that level. Bitcoin, what do we got in here? Oh, look at these little cheeky buggers. I haven't looked at them for a while. Natural gas making a little move. Look at that, taking out those highs. Cheeky buggers, look at that. All right, let's get over here and see what's about to happen. Right into the bull trap. Look at this. Do we get a revisit of our Nope, just into the bull trap here. Mean thresholds holding. We have a change in direction. Change in direction. Wait for that to close. Through the breaker. Eating into the discount. Through the discount. Now where are we headed for? Oh, we've wicked through it, but we have not closed below it. So even though we haven't wicked through it, we're looking at this level right here. Right there. Now you want to see it react off of that and come back down again. Looky. Now I'm stuck between, are we going to drive through this now, or are we just going to come back and drive through the lows here? Because that's like box to box with an ugly little taking out this liquidity here. So I like that level there. Let's see if we can keep pushing lower. I want to see it take out this structure break down below us here. Yes, there we go, my friends. There we go. Saeed! How's it going, buddy? Good to see you, man. Hope you are well. I hope your family is well. I hope everybody's safe and happy, my friend. There you go. Done and dusted. Look at that. We called that right as it come to it. It was like, ooh, that's a short right there. Delish. There's the lower levels liquidity taken on the downside. Now, do we just mash around in here because it's 9:30? Do we just mash around in here, creating victims? If you're really precise on your entry like that one there, and you collect it right there, you're obviously moving into profit now. Take a chunk of your profit here, and we're looking for downside delivery. I'm looking for here, and then I'm looking for, so looks like we've hit that already. Yes, we have. Yes, we have. Where are we looking next? I'll be looking right here. We'll take it all the way down to here. It's a delicious run. 211. Let's go get down here. Look for your discount box. Oh, Hadi, you got in just a little early, but if you caught that right there, I was looking for this to retest these old lows here, and it was just like a couple of, like a tick and a, oh, there you go. Now you're short. Now we can get a return back up into this level right here. I don't want to see this breaker get taken on the upside. So here's your first presentation fair value gap. I want to see that roll over here now and start heading lower. Nice. Cold out there, but I've got too much sweaters on here. I did click a short there. It didn't register. Delicious. Keep coming lower. Oh, it did. There. It finally pops up now. How ironic is that? How's that? I clicked it right in this low here. Well, thank you for finally registering it. So we're risk-free right now. So I'm just making sure I stay just below or just above this regular trading hour gap. Chances are I could come back and hit it or hit the consequent encroachment and take me out. So you got to pay yourself at the low. That's the first one. I'm out there for a sec. I'm just going to move to the sidelines. Just want to see if we can get through this level on the downside. We're freezing on the bodies, so I don't know why this is not letting me out. I'm hoping it's going to say, oh yeah, he clicked the button way back here. Look at that. It's like, let me out. Damn you, TradingView. Yeah, so we've come down to that first D1. Oh, it's still in there. Come on, get me out here. Let's go. See, I don't trust this guys right now. This whole lag, that was a huge lag in there. Anyway, I'm going to ignore that. So I would have been out here. Oh, now you take it off me. Thanks. So there's your discount box hit. Now you got to wait. Watching for this breaker, and I'm waiting for something clean to set up. Lots of wicks happening in here now. So waiting for something clean to set up. We've got this little first presentation fair value gap here with a little imbalance. That's why that's included in there. If you just look at the SIBI itself, 178 to 186. Now looking inside this range, you're looking at where are we in terms of the, where's this SIBI? Is this SIBI in a discount portion? It certainly is. So if we trade above it and come back into it, looking for 50, 62%, looking for P1, P2. You're already over 50% now. So think about it. If we've ran into the breaker and this rolls through here and goes down lower, then this is potentially the next leg lower. And see how we've wicked through that? I don't even like wicks. I like precision data points, hit and react off them. And you're in that 9:30 to 10 o'clock chop. And I haven't checked to see if we have news. Is there a news event? I don't think there's a news event for a little bit, a couple of days, 2 or 3 days, isn't there? Vaguely remember looking at that. See if there's anything up there. We got 11 o'clock. Well, that's Europe, and let's get rid of all these low-end news reports here. I'm going to keep Euro, GBP, get rid of that, apply filter, more, and we'll just quickly move that over to there. See how we've traded back through that? We'd already run into the 50% or more of that range. So you got to be careful of that, right? You've hit the breaker. So when it's running over 50%, what's the target it's looking for? Breaker, and then P1 is right here. You didn't even get to P1. All you got was the breaker. and you're above 50%, now you're below this change in direction. And if we come back and revisit it, which would also be the mean threshold of this candle right there, now looking for this to go lower. If we trade back through it on a close, then we're looking for it to go higher. So you can see how it can switch it up for you. So if you hit this, then you can go into that 15-second chart and look for a reversal here. It's almost like a backup plan. So the 15-second, if that's the 1 minute level that we're looking for to retest, which is also in here on the 15-second chart, if I can see this break here, use this as support, then I want to see this keep coming lower. You see how you use the lower time frames to confirm your trade off of higher time frame objectives. So just to repeat that, this is where we're looking for this level right here. I'm looking for it to come back in, retest it. It did. Then I'm looking for the lower time frame, 15-second, to see if confirm that this is not just going to run through this, that we do have a reversal on the 15-second chart to confirm that we're still going lower. So here's your 15-second chart now. We've ran right up into that level we were looking for, which is also this level here. And now we're looking for a reversal. Change in direction right here. Come back up, give that a little pop, or take out this low right here, like that. Come back into it, and then you look for continuation. Right there. And you want to see it take out the low. And you split the wick into quarters as well. Watch that. But I'd like to see that go low. I don't want to see it get through this level again now. Ideally, you want to see it just leave straight down from here. It's already tagged that level. You want to see it just leave straight from here. It trades back through there. Welcome to Chopsville. Here's one more to retest. So now I break the low, so I go to break even and let the trade run now. And that's how you get your confirmation. See, we saw that 1 minute chart. Let's just review that again. That 1 minute chart, we saw it trade through it, come back into it, and you go now, go to the lower time frames to look for that higher time frame. That's exactly what I talked about on the weekend, you guys. Now we're below this level and want to use this level as support. Or take profit model 1, take profit model 2, whatever one you're using now. This has been broken, so this can be retested, this whole level here. Pay yourself below that low. I've only got one on, so. So go back over and review this weekend's analysis. I kind of break down how you look for higher time frame reversals, like this one right here, how you look for the higher time frame reversal. And this 1 minute one worked perfectly. So you see that right there. You could have got short from there, and you could have been enjoying that short for the last couple of hours. There's the retest. Now you want to see it leave. Just start leaving from here. You don't want to see it trade back through there. If it does, it'll hit my stop loss, and I'm out. So you pay yourself down here. See the difference between what I could have made with just one, if that's just my target, and then I just wait for another trade opportunity set up. There, I'm out now. So if you're just targeting that, this quick liquidity, that would have been 400 versus 270. So you see how that was done? And that's what you got to do. I think that's what I think you have to do. To look for cleaner setups and higher time frame objectives to reach for. So if you're looking for a, if you got in on a 15-second chart, you're just aiming for liquidity on the sell side. All this sell side liquidity, put your take profit below the lows. If you tag it, great. And then wait for another setup. And we're at 945 now. So I'm looking for a potential reversal here. Now that we're through this level, I want to see this come back and use this level and this as support to go higher. And then I'm targeting up here. Take profit model 1. There's no body above here yet. Wait. Now, if no body gets above here, just look to see if a body or a wick touches this. I took a sell at the breaker. Good for you. And closed at the low. Good for you. Discipline, man. Pay yourself. Oh, what an idiot. What a dumb commercial. Let's watch this Tai Chi commercial. Guy's sitting in a car. Looks like he's naked in the car next to this woman, and they're talking about gym or Tai Chi. Like, oh, please, really? I get it. You want to sell this rock solid body. Guy's just going out for dinner, half naked with his Tai Chi body. There you go. There's the premium levels hit already, and this discount level, we haven't traded back to it. So again, keep this in mind. We haven't got a chance to get to it yet, right? Bull trap 1, and then it's inside the bigger one, which is right here. So there's the premium level hit. Now look for the discount level to get hit. Now you're stuck between box to box trading. And now I want to see, do we break this level now, or do you break this level here now? I got Kenny Rogers going inside my head right now, you guys. It's not good. Love will turn it around, turn you around. I don't know why. I don't even think I've heard a Kenny Rogers song in decades. But suddenly I got love turning you around inside my head. It's a lovely brain. It just ventures off on its own. So we did not get a discount yet. So keep your eyeballsios on that. And if it doesn't, if this just got some intention of going higher, then wait for this level to get broken to the upside. Watch for this little imbalance right here. Mean threshold, half of the consequent, or after half of the or consequent encroachment of the first presentation fair value gap. They're overlapping. So wait, look at that, right into that box again. Better than the gambler. Yeah, there's nothing there right now. You're between the boxes. They're just boxing back and forth, but this one hasn't been hit yet. So we're still waiting for validation of this. And then I get to see, are we going to go lower from here? After taking out the high, creating the new high of the week. well, overall new high of the year, the season. So while that's boffing around inside there, this is doing the same thing. Oil's inside our discount box here, right here, and it's bounced off the consequent encroachment multiple times, but still hasn't got any leverage to get anywhere. So you're kind of just looking between 1 minute and 5 minute. Love will turn you around. So you see the box to box we're doing right now? Down here, inside this larger range here, box to box, bing, bing, bing. We're just kind of bouncing around back and forth. It's the beginning of the week, my friends. No need to rush. No need to rush. Gold. Let me see gold. Oh, yeah, look at this. Gold had a nice little pop above the level right here. This is the premium box. We finally, nothing here. You finally got above it here. Come back inside it. Tap this one below it. And then we want to see it break through. Why do I have this one here? That's an hourly. Is there a 5 minute or 15 minute there? Ah, there we go. Here's a 15 minute one. So do we break this old high? We do right here. Oh, sorry, right here. We break through that level. We take out this high. We come back down to the high and continue going higher. We'll also look over here. This is where this comes from, in case you're wondering where it is. It's this guy right here. So we get this final pop through it, come back, enter into there long. This is where I was showing you guys last night on the gold. And then you want to see it continue going higher. We have a change in direction here. Then all of a sudden I went back through that level. Wait for, you got a change in direction inside this range here. All we do is get like a little institutional order flow entry. Usually it occurs on that second one, the next candle down. But anyway, we retouch this BISI here. Send it higher. Watch for the high to get taken. It does. Use the high as support. Goes higher. We're inside this range here now, 62, 70% or more. We have not broken market structure to the downside. This candle takes it out from the high. Mean threshold holds the bodies, takes the high. Change in direction here, draw it across. Right there, body breaks below it. You come back up into it. You've already extended this little range here and this one here. We have a swing below some lows right here. You got to wait for a body to get above that, or use it as support to go lower and take out the low. You get rejection block only, and then it runs right through, takes out this high. Now I'm looking for this level to provide support and run higher now. So I'm looking for these highs to get taken, support off this level here. Ideally, that candle's mean threshold you don't want to see get taken. So right here, I don't want to see more than this. And forget about the entry thing. And the stop loss would be sitting down below the two of those, one tick below the two, which is below that SIBI, which hasn't been hit yet. So if you do lose this, look for this level right here. That's why you look for that and look for a 15 or a 5 or a 1 minute. Oops. Change of direction. This is a 15-minute objective. Now you want to see it on the lower time frames, confirm that, see the confirmation, and then watch it go higher. Look at that entry there. We're talking about this refilling this gap. Look at that. Nice refill. Now the highs are taken. The body's finally traded through it. Look for the mean threshold. It gets taken. We have a fair value gap forming above these old highs. Institutional order flow entry drill. I want to see this keep going higher from here and not just fill in this higher time frame fair value gap. Discount box. This is the hourly discount box right here. Bodies are respecting that. Wicks do a little damage. We've cleared out the liquidity below the market here and here. Bodies were respecting this level. We want to see it get traded through, come back and find support at that, and we're gunning for this level right here. So if you're into Forex, look for your first levels here, and it overlaps, so I'm going to use both of them. I'm looking for that target there. But you want to see this, before it reaches that, you want to see it come back into here. Use it as support on the lower time frames to reach for your higher hourly objective. Meanwhile, back at the ranch, nothing's happening. ES, finally breaking free. I'm free to do what I want any old time. Okay, so there's Friday's first presentation. Fair value gap happens to overlap right with our change in direction. Find support. Look at that. Nice. Bit of wick damage, but body's respecting that level. Pushing, reaching for equal lows. Done. Paid. That's a nice little trade on ES. Albeit choppy, it is a nice little trade. Bodies did respect that. And we're driving lower. So does NQ follow? Look for that level. Same thing that we just had in ES. We want NQ to follow now. Give us this level right here. And start reaching for those lows. There. Come back. Well, that was a little delay. But okay, I'll take it. I'm just going to sit up here. I don't want to see us trade through that level. It's kind of sloppy. There's the full fill of that level. I'm going to put another one in there. Oh, I can't put another one in there. Okay. So I want to see this roll over here now and follow ES. It's going to muck around in here and give me the premium level. I've already hit the premium high. We've come back down and now we're hitting the premium low. I don't even want to see wicks getting through that. Don't like to see that at all. See, now we've got a body above it. I'm on the wrong side of this now. That's probably going to come take my stop. As soon as I see this, I'm on the wrong side of it. Close your trade. Get discipline. Close your trade. There's a potential for it to run into here now. So you're stuck between this level and that level. And that's where you didn't want to see it trade through it. And the moment it does, you're like, I'm on the wrong side. It's going to run higher and it's going to take my stop, which is we're sitting here. So fail safe's there. Come back and find support at that and push higher. I'm between those two now. So you're not going to keep jumping around in there. And if it runs back through that, that is not means to beat myself up because I closed my trade off and it kept going in the direction I wanted it to. My rule is if it breaks that high right there, I'm on the wrong side of it. I just wanted to see it come back and test it and go lower. Then you start to lose faith as it starts to eat through it and closes. I'm on the wrong side, so get out. That would have taken my stop loss there. Came back, tested it, give you one opportunity to take your trade off, and then would have come back and taken my stop. Now some people say, well, why didn't you put your stop up top there? See how we're using this level now as support to go higher? So now we're through the premium box and now we're running the risk of taking these equal highs as well. So that stop loss would have been taken as well. So that's why I have it as a specific data point. Because if it runs through here and takes a high, you'll go, now you know why I didn't put my stop loss up there. Because it would have been a bigger stop when I saw that it was already changing direction here. And here you go. Done and dusted. Your stop would have been taken there as well. We knew we were on the wrong side of it. So to be more ballsy, you could say, oh, instead of taking a loss, I go, okay, I'm on the wrong side. I'll just wait for it to come back in here, use this as support, and then I'll run for this objective. If I hit it, good. Pay myself, get the money back that I lost in there, and then aim for the next objective above, hit it, pay myself again, move my stop loss to the ICT below, and then let the rest run. So you're back to profit again, and you're back in sync with the market. That makes sense. Coming back into this level, and we're through that level. So you're from a data point perspective, you're ripping through a raise you would like to see supported if you want to go higher. And this level here now is traded through. Now you want to see that freeze right there and come back down. See that? That's specific data point, and it's on the TIBs as well. So now if it keeps coming back up and playing between these two, ripping through them, coming back through them, wait for a structure shift. That's just too much chop for me. Hopefully you understand my point. Very bullish now. Where do you get very bullish there, Hadi? We're still bullish on the daily, I agree. I don't have very bullish at all there, bud. We can get back above this 4 hour and use the 4 hour support. I'd say we're more bullish, so that we bullish on the daily, bullish on the 4 hour. Oh, I see right here. The 4 hour is right here. What am I looking at there? It's right off there. Okay, I see what you're looking at, Hadi. If you're looking at a 4 hour chart, that's bullish. But remember, we haven't got this one yet. So if this rolls through here and clips this, then runs through and takes that, finds support at it to run higher, just prepare yourself for the 4 hour discount that hasn't been hit yet. So this is now just a 4 hour fair value gap. We're just reclaiming the bullish order block or bullish SIBI here. Bullish BISI, sorry. Buy side imbalance, sell side inefficiency. So we're using that as an inversion, or it's not inversion. Inversion would have been coming down. This would have been the inversion. Now it's back to fair value gap again. Again, I don't care how you define it. It's a support level. Now looking for this mean threshold once again. 182 puts you right inside the first presentation fair value gap again. So if you're looking for this to take out this candle's wick, I want to see the bull trap get taken to the upside, find support, and then I want to see it run higher into this level. Remember we talked about this level? Or was it over here? Sorry, over here. Hasn't been hit yet. This one has, beautifully. We talked about that. So get a body above here, and then you're stuck inside the big bull trap here. So wait for it to break above that first presentation fair value gap and use it as support inside the bull trap to run higher. I haven't even put that in there yet. Let's put that in there. What you get when you wake up too late. Put in your levels. Now, how many people used? There's 59. There's 60. How many use this as your first fair value gap? Or do you wait for the 01 like that? I'm going to use this one. That's my Monday. And we've got our midnight. Midnight open. Bounce, bounce. Is there a 6 a.m. fella? Way too choppy, man. Wait for something clean. Way too choppy. What's the S up to? Nothing. It's choppy. Oil. Nice long there. Look at that. Right off that little imbalance there. Look how it found support at that. In that first candle here. That's beautiful. Change in direction. Change direction. Wait for this candle to get taken on the downside. Does keeps gapping down. So there's, unless you would have caught a 15-second reversal there off this low or off that candle there, then wait. You're already back into this here. That would be a nice little so the body went above it. We never got an opportunity to get filled. Now you do. Look for a change in direction here. Now, stop loss can be super tight. I don't want to see it get below there. Takes that high, move to break even. Keep going. So I'm going to move to break even. Pay yourself there. I'm going to see if this is the turn point from the higher time frame objective we were looking for, the 1 minute. Right off this level here. Now I want to see if we come back inside this range, and I'm targeting up here now. Or targeting, let's do a take profit model 1 here. So you see how I'm already at break even, so it's not going to cost me anything for the trade. So what I'm going to do is I'm going to follow my stop loss up according to, as soon as I hit the 50%, you'd move to break even, pay yourself a portion there. So in this case, because I've only got one on, I'll move that up to like 25% or something like that. And we're targeting for a box up here. This would be box to box. If this comes down, tags this here. All the way down into that. So we want to be below this level, because if it gets activated, then I'm looking for a box to box trade. With zero stress, because, you know, your trade's protected now. That's active now. You want to see that stop right there and start going higher. The precision data point is right there. You don't want to see it even wick through that now, because that would be 1, 2, and then the mean threshold, which we're just sitting below, it'd be the next target to aim for in terms of PD arrays. So see how it froze? You want to see it freeze right on there and keep going higher. And don't worry about what you've lost. If it doesn't hit 50%, it just tells you that it's got much more aggression to run down into this discount box here. Like this is just another price leg lower, and you're covered. So you want to see it snap off of here and start driving higher. Nope. Wait for the candle to end, because this could be one of those little wicks that does some damage. If it does, it just comes back and clears us out there. We're digging down into it again. I'm going to close that off. It's not acting the way I want it to act. The bodies are respecting it still. That might have been my bad. I would have got suckered in on a wick there. The bodies have not broken that level yet. So if that runs higher now, that's playing chicken, and I flinched. I flinched. And that's all psychological game right there, because I let my head take over there. I convinced myself that that little poke down, those pokes down, convinced me to get out, but the bodies are respecting it. That's the psychological game, not the ones and zeros. A ones and zero would have been, did it close below there? No. Did it take your stop? No. So now we're back up into that range, right on that SIBI. And we're starting to poke higher. How funny is that? Made you flinch. Two for flinching, man. Two for flinching. So let's see if this goes higher here. So if you're still in that, if you took the same trade, look for your 50% now. You'll be back to break even again. You're taking that high. Keep yourself safe. Look for 50%. You're going to take half the trade off there at 50. And you'd move your stop loss there. Take half your trade off. Move your stop loss to break even. You've got half your trade. So if that reverses now, this is take profit model 1. If that reverses, you half your trades off. You've already made some money inside that range, and you're at break even. So our break even would have been just above here. So it comes back and takes you out. You go, oh, well, I nibbled a little piece, internal range liquidity, hunted it, hit it exactly. So instead of 20 bucks, you would have made 100 bucks, just over 100 bucks there on one handle or one contract or whatever. Does that make sense? So all the time this level holds, you could do a buffer and take another long there. Stop loss would be sitting just below these lows, because you don't want to see that get taken again. And this candle now acts as support, and it's a swing point. So you could go like long there. We'll do a long right there. Stop loss will go down here. And you want to see it. The next one hit 62% and come back up into that candle a bit higher. If this is the next price leg lower, you'll take a $70 hit. You don't want to see this level give way, and I don't want to see that level give way. So I want to see that go higher from here. Take profit will be up at 62%, just up there. So I'll come back, we'll analyze this, I'll let it run, and I'm looking for this order block here, old low, to get tagged in that little imbalance right there, that little price imbalance. Looking for it to reach for that. And then obviously targeting that higher time frame objective. So I'll let that one run. We'll get back over here. Ooh. Hadi, you said you're looking for a 15-minute box to box, are you? Let's have a look at that. Okay, so you're looking for premium to discount over here. We've traded through that level. Ooh, we're already wicked through this. I'd wait for this to fill and look in the lower time frames for a reversal up here to get down into here. You're already a wick through that already. Yeah, I'd wait for this to get your SIBI to get hit and that BISI to get retested, or look for 200, the 200 level, which happens to coincide with this BISI up here, this P1. Wait for P1 to get hit and look for a reversal if you want to drive down to this here. And the hint there, Hadi, in case you're wondering, is right here. This order block, you wanted to see it come back, tap the bottom of it, the low, and then if you take the mean threshold and you start driving wicks through it, it just wants to get higher, right? So the highest part is right there. If it breaks that, then you go, it's heading for here. And it broke it. Now it's breaking it again, and I'm looking for this level or this right here at 200 on a 15-minute chart. So I'd be looking for anywhere from 200 to 186, and we just hit 185 now, so you're back inside this level. That puts you right on this candle's high, which is 186. This candle's high is 185. One more handle to reach our premium box. And 188 will give her a fill of the SIBI. So once you're here, start looking at the 1 minute chart for a change in direction, a reversal, and then a structure break, and then start running for this discount here. You guys may get your midnight open yet, which is right in our discount box. Wait for structure breakdown here. Nice. Look at that. Right back into here. Institutional order flow entry drill. Nice. Pay yourself. Pay yourself. You're at zero stress on that trade now. If you're in a gold trade, this gold trade right here, 1, 2, 3. There's your line in the sand. It comes just before it. Institutional order flow. That's an A level graded response. Takes the high, pay yourself. Takes the high, pay yourself. Move to break even. You do not want to see it get above here now. Let her buck. So Ali, here's it. This is you want to know what your upside levels are? You can do one of several things. You can either do your bull projection. So you could look for 1, 2, 3, or 4. Or you can use take profit model 4. That's take profit model 4. So you're looking for 1, 2, and if you get 1, pay yourself, move yourself to break even. If you hit 2, move to 1. If you hit 3, move to 2. That's take profit model 4. Or if you're in there, you wait for anything on that 15-minute level now. As soon as you broke that high and you paid yourself and you went to break even, then you just wait for take profit model 3, which is your first BISI that gets broken to the downside here. You get out of your trade. You just let it run. Let it run, let it run, let it run. Just use take profit model 3, but follow all the rules associated to take profit model 3, or take profit model 4, or take profit model, there is no take profit model 2. When you're making new highs, it's either 3 or 4 you got to use. So your choice, Ali. Right now you're break even You paid yourself. You got money in you got some gold shekels in your pocket, and you're letting it run. If it comes back and takes you out, oh well, you paid yourself at the highs. Wait for a new setup. What's Mr. Bitcoin up to? The Rambler, the Gambler, the Midnight. Rambling and gambling. Short here, but see how we're inside this range? You want to see that hold now. So now you go down to the lower time frames and you're looking for any chance to see the reversal that supports whatever level this lands on. So do I see a reversal on a 1 minute chart or a 15-second chart in here, and then start running lower? I'm aiming for these lows. The rejection block's already been hit. So inside this range, ask yourself, if I bought this, do I want to buy it at a discount and sell it at a discount, or do I want to buy it at a premium and sell it at a discount? Or sell it at a premium and buy it back at a discount? So you're looking for, there's equilibrium of the range. So you got to be above that level to catch a premium to sell at a discount again. So wait for it to reach there and then look for a 1 minute chart. So we're turning into this breaker here would be a nice little retest, because we have not retested it yet. So right here, they got to change in direction. Right there, you've just tapped it. So we're coming back inside this range. I want to see it hit here. So now I've hit that discount portion. I'm pulling back into that 5 minute level I'm looking at here. So I've hit the maximum rejection block. Now I'm looking for a reversal on there. If you're looking for a reversal, there it is on your 5 minute or 1 minute chart. You've tapped it right there. Now you're looking for continuation. 50%. Pay yourself half. Your trade is off there because we're going long now. And we're just pulling back inside a 5 minute chart. And we're reaching for where? Here. So look for 62%. Sorry, I got this on the, remove this. The Rambler, the Gambler. And you'll get an idea of why this is there's 50% of the range. So you pay yourself, and we're back to that level. So now I'm looking for a 15-second. So now I've got my 5 minute. That's an objective I'm looking for on a 5 minute. I'm still inside that level. And now I want to see that hold. And if the 1 minute chart, if this starts giving up, now I'm looking for a 15-second reversal, because my 1 minute charts hit a key level. We're at 50%. Now I'm looking for any chance to catch a reversal to take this out on the downside and still go lower. If this objective holds, I'm expecting to see that all the way down to a 15-second chart. I followed it up on a 1 minute. So I saw the reversal, paid myself on the reversal. Now I'm looking for the reversal again, because the 5 minute chart shows me that that's a level, higher time frame level. Now I don't want to see how we're already starting to wick through it. Don't want to see that, because there's nothing up here other than that candle's low at 0.19, which we just hit. Oh no, we didn't. We're just hitting it now. 19, no, stand by. Whatever that low is on that candle. 16. High in this candle is 11. So a bit of the damage came into this candle's wick, 50% of the wick. We hit 50% of the range. Bop, and I want to see that 15 set 1 minute chart. See where we're sitting right here. We're bouncing off of there. We could come up into this piece right here. So I'm looking for 0.48 to 106. I'm looking right here. Put you right at 62% retracement in this range. And that's your bull trap and the next bull trap. I'm looking for this level right here inside the breaker. See if that holds and then look for a reversal. If we get up on top of this and this, it gives me some more support, and then we look for that next Sibby and the next bull flag to get, or bull trap to get hit. Then I'm targeting up here. And then you say goodbye to your 5-minute idea. Because then you're looking for mean threshold. This one, it's low, it's open, and it's mean threshold. Those are the 3 targets I'd be looking for once we get through here on the 1 minute. And we caught the reversal on the 1 minute right there. You pay yourself back there, and you're looking for that higher time frame objective's been hit, so pay yourself and wait. There's that level there. Now let's see if we eat through this. So far our 5-minute idea is that didn't hold. So if you're long, so if you decided to go long here, right there, and you decided to go long, you go, all right, I'm waiting for any opportunity. Once I hit that level on my 5-minute, I'm looking for any opportunity to get short here. Okay, keep going. You can keep dragging me up with you. So like we talked about here, Ali and gold, if you're in a long here, you're just looking for a take profit model 3. The first, so you're not even worried about this stuff. That's a take profit model 2. Box to box trade. Right? That's what we're looking for right here next. So you look for funny that I cloned almost precisely where I needed to go. So this level has to hold now for it to come back lower, because that's 62%. If it pops up above it, you're still using a take profit model 3. We have not got a reversal yet. So you're just tracking it up from this one, next one, and you're tracking behind it, because you say if it, because the fail safe is if we close below it and come back into it, our take profit model 3 is finished and our stop loss is back here. You don't want to be leaving it here in case it comes ripping right back against you, right? So every time you get a new one form, you're just behind the one behind it. Okay, so if this one formed, you want to be just behind it here. And don't forget, you're up in the premium portion of this range already. So if you're choosing to take profit model 1, you've already paid yourself at the 50% and 62%. And now we're waiting to see if this candle here provides support to go higher for the premium box. Each one of those take profit models give you a specific set of rules relative to a specific candle. So if you don't have the rules written down, you haven't got them memorized, and you don't have them, again, they're my rules, so you may go, I don't like your rules, buddy. Each take profit model, and we'll talk about those, Russell, when we get out there to the summit in Toronto next week. When we get out there, we'll talk about the rules. You write the rules down so that you have them. So bring a notebook or bring your laptop, whatever. And we're going to tap them all out, because there's a set of rules that you need to follow. What is a fail-safe? I'll give you my rules. I put it to you that way. You decide whether or not you like it. See how this is ripping back against you? While you pay yourself at 62%? Look at this. This is why you're going to... We're looking at that higher time frame objective. You got 62%. You've paid yourself. 60% of your trade is off right there. And take profit model 1. And if it's a take profit model 3, then as soon as that level gets broken on the downside, you're out of that trade. A wick doesn't count. Your fail-safe or your stop loss is here. Fail-safe is there. If we close below it first, close out your trade before it comes and takes your stop loss. Because now we're inside this range, and that's the premium, and this is the discount. Now out. Move to the sidelines. See how it traded below it? That's your take profit model 3. You're done. Move to the sidelines. If it trades above it again, you can use that high and this candle as support to go higher. And then you can get back in sync with aiming for that objective there. Does that make sense? So you're always covering. Now that that has been broken to the downside, we use this as support. If this rolls over here now, keeps coming lower, there's your box to box trade inside here. The ideal trade short is right there. So if it trades through it on a close and comes back and taps it, stay in sync with the market. You're on the wrong side. It's still going higher. You can get break even, get back in sync with it, and run for the premium. If it does, that holds. That's the perfect entry for a short. Stop loss would be sitting up here because you don't want to see it break through this level, and you don't want to see that high get taken as a specific data point. So now you want to go short. You're inside that range, box to box. And you got to take all emotion off of that and just go ones and zeros, buddy. Ones and zeros. And your stop loss is tight. And if it takes you out and you get frustrated by it, why? It's a fail-safe, man. It's changing direction. So then just get back in sync with it and see, expect it to run there. So just watch it right now and see if any of what I just said comes to fruition. So we're looking for this level. If it gets closed above, our stop loss would be sitting right there. So we have imaginary trade here. This is just Bitcoin, but you'll understand. My stop loss is sitting here. This is just paper trading, not even demo trading. It's just paper trading. What you're looking for in terms of levels of support. So you don't want to see it. Right there. See how it's starting to pop through it already? You go, nope, don't want it. I want that precise data point. I don't even want a wick getting through there. Close your trade. And wait now. So if that next 35 seconds, if it closes above there, that's the demand for, I don't even want to see a pop through that, which is what it's just done. Your stop loss is there. It would have taken it. See, as soon as it gets through there, that's a demand. I don't want to see it even pop through that. So your stop loss is gone. Now we wait. If this trade now, I want to see if it closes above this or just the wicks did the damage and this is going to continue going lower. And if it does, then don't sweat it, man. We've got a very tight set of data points here. And if wicks are just out to do some damage, that's what they're going to do. They're going to come back, take you out, and keep rolling over lower. And that's the problem you have when you have a really tight little range like this. And we're in the middle of this larger range. So let's just wait and see. We're still closed below that level. We have not closed the body above it. See, that would have taken me out there just on that wick. But that's okay. That's okay, you guys. It did the damage. Wait for it to close below this level and use this as support. And then box to box. 8 seconds. So far this is our 5 minute. Our 5 minute came back up inside, no, it went above that level. Ran up into a premium portion of this larger range here. We're looking for a reversal inside this range here. The bodies are respecting it. We had some wick, do some wick damage there. Bodies respecting it still. So that support level still holding. And here's our box to box. Done. So there's your reversal area. Stop would have been here, would have got me for sure. If you're doing it right, your stop loss would have to be just above that high, because this whole area is where you want to find support. So it literally would, if you were to like one tick above that high, depending on the spread, that one tick may have been taken out as well. It's a level of demanding precise action, precise data points that we're looking for. It hit the level where like the body's respected it. Wicks unfortunately did the damage. And now if we can get back through this level, we're back in sync with our 5-minute chart running lower. Does that make sense? So we were too precise there. How's that? So you wait for that level there. Does that make sense? Do you guys get that? Okie dokie. Let's get back to this slop here that we call price action. See that level there? You traded through it again. We're into it. We're into it. Now we're finally going to look for a run on the lows. This candle here, we get broken to the downside. You find support at it. Look at that. Its mean threshold holds price. We go lower. Amazing idea. What's amazing idea? Did somebody give an amazing idea? Who gave an amazing idea? What are you talking about? What are you talking about? Adi. Amazing idea. Don't like it. Bouncing 8:30. What's an amazing idea? I missed it. What is this all about? Load taken. Pay yourself. Oh, you were talking about the notebook for rules. Yeah, we'll all kind of get together. Hadi, bring a notebook. We'll share ideas. We'll explain our rationale. There won't be any arguments. There won't be any, no, mine's better than yours crap. Let's just go and put our heads together. That's what the summit is for, man. That's what the summit's for. Let's get our heads together, come up with a set of rules that we can verify, that we can, our narrative is supported, and then we've got other minds that can test it and challenge it. And if you can challenge it, and if somebody challenges it and it breaks under pressure, then good. We can all put our heads together to see how we can modify it and strengthen it. That will be the big trade summit in Toronto. That's what we're going to do, is put our heads together and do that. That's the agenda. How's that? That's the tentative agenda for our little summit. So when Rez gets there and Amarjit, if he comes, then Russell, me, you, there's 5 of us get together for the writing the rules down of each one of these specific trade models and each specific setup that we like. I think if we ever meet up, if we ever come to your country and or city and we meet up, I think that's got to be a rule that a standard rule that we do. We write them down so there's not just discussion about something, that you actually have it from here into reality. Because what you think is not the physical reality. So take what you think, put it in the physical the world, that you can see it, identify it, stick it up on your wall. So now you've got a reference that you can follow. And if you're losing your trade, look at your rules and say, did I follow my rules? If I didn't follow my rules, then I'm trading impulsively. My rules said that. Now, if I still take a loss on that, now you can start to go, I've got a loss. Why did I take a loss? Was it my rules? Do I need to modify my rules? Or am I trying to force a trade? And I bet you 9.9 times out of 10, you're trying to force a trade. You're trying to force some sort of trade inside this crap, for example. This is just, you don't play in here. Wait for something clean. Look at that, right down to the box to box. How beaut is that? Look at that. Full on tippy tappy. Pay yourself, pay yourself. Now you're back inside here. So you go from box, trade back above it. You're inside it again. Now you're looking for box to box. This is boxing. Box, 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 box. This is Saturday night at the fights, my friends. Look at the swing. That swing could get just tapped right there, a roll over and come back down. And then if we take out that and that, look for continuation on the downside. This little mitigation block here, it did not take out an old high, but we've got relative equal highs above us. So I want to see this get broken to the upside, find support, go higher, eat through the premium box, and then see if we can get on top of these two guys to leverage for the next premium P2 level. See how that's reacting off of that? Nice. Nice. Now let's drive through. So now you see how we're compressing. If you run up into the premium of this range, which is hit an objective, go to a 15-second chart and see if you see a reversal right here. So again, we have a higher time frame objective hit. Go to the lower time frames and look for a reversal. And then you're aiming for, where's my next objective? It's inside this level here, and that, and then this, and then this. So this would be the mean threshold, would also be the mean threshold of this, or consequent encroachment of this SIBI again, or inversion. And then looking for that low or rejection block. See how they're overlapping? Anyway, let's see if we can go to a 15-second chart here and see if we see a reversal right at that level. There's the change in direction. Traded below it. You don't get an opportunity to get in it there. Look for the next one. Retest. 8 through that. Get here. So now we're back. I want to see this because now we're inside this range. You're already starting to get through 50%. And now all of a sudden it's discount for discount. Not worth it. Wait for a structure break. So if you already eat up your 50% of your range or more, then you're best to wait for an extreme discount or extreme premium. Hopefully, if it rolls over and goes back lower from there, you're catching the high, like right there, the high of that BISI. And then you're expecting to see it run lower. If it doesn't, it goes higher, then it just takes you out there. It's a small stop loss. That's why you got to wait. Once that 50% of that range has already been run through, then your internal range liquidity hunt has already been eaten. If you're not catching it on the first run, trying to get it a second time when you may have a reversal for continuation to the upside, your risks or your opportunity to fully milk all that liquidity in there is gone once that 50% has been taken out. Right? Because we will look at 50, 62% as optimum trade entry for a reversal. And if you haven't taken the liquidity on the way down, don't expect to try and get it on the second run. Does that make sense? So you're just bouncing around inside here now. You got this whole SIBI is where you're sitting inside. Put up a set of rules for everything, reversal documentation trades, all that. Yep, that's exactly it. That's exactly it. Come out and follow the rules. And if you're not following the rules, you got some rebellious streak that you need to go get help with. Because you're only fighting yourself in the end. Watch that level. Let's go back to that 15-second chart. Where did it hold? Look at that, right in that premium level. We traded through, back into the premium, watching for this level to get taken now. And this low, you don't get an opportunity to get a retap. Look for this low. You don't get an opportunity for retap. Now you got to look for this low, wait for an opportunity to get a retap in here, or a retest of this. This breaker, these 3 down close candles that take out that high. There's the full run from box all the way down into box again. On a 15-second chart, you guys. 15-second chart. You're still seeing it. Now I want to see that roll over here and come lower. If it comes back, all that's but fair game, because inside that range is 50% or more, puts you right back into these. But I want to see that. Now if it's really strong, no, it's not. I'll say if it's really heavy, it'll just start popping through here and start running lower. So watch for this level now. On a 1-minute chart, what are we looking for in terms of a data point? Yeah, it's got to get back through this first presentation and use it as support right here. Use it as support to go lower. So wait for this structure shift here and here to run lower. Anyway, hopefully you understand what it is I'm trying to point out there. Ooh, are you happy, Ali? This little run we gave you earlier, 15, 20 minutes or half hour ago. Are you happy with that? Now you're just trading for a run high. Just let it run, man. That's a nice little, look at that tap right there. Right off that last 15 minutes, tap it, let it run. Now you want to see this. Remember, I tell you every session, as soon as you see this high taken, what we want to see is a fair value gap forming above it. This candle, you want to see leave this, a chunk of this open. And then you're going to grade your response. So write those rules down, whether or not you want those rules. But anyway, that's pretty arrogant of me to assume you want that rule. But anyway, this is my rule, is wait for a high to get taken. We want to see a fair value gap form. That's a stronger idea. And then I go, rule number 1, I want to see this fair value gap form above an old high. Then I'm going to grade the response on the very next candle after the BISI has been formed. Okay, so the very next candle, A response, an A plus response is just a full leave from there. It doesn't even give you an institutional order flow entry drill. An A level response, so grade it, would be an institutional order flow entry drill. So tap the low or just a little nick into it. That's all I want to do is tap the low of that candle or the high of the BISI. Just nick it. That's an institutional order flow entry drill. Watch it continue going higher. That's an A level. A B level would be the consequent encroachment of this level of the fair value gap here. Now, that often lines up with the high that's created over here that we've just broken. So when you're reverse engineering this, look for 50%. If this is 50% of the range, then as soon as your candle starts to run higher, look for that and go, ooh, if I'll take this here and I'll go up 50%, then I'll add another 50% and I should get the low of this next closed candle. That's how you kind of reverse engineer that. As a guess, just to start out, not that it's 100% because it's not. So your graded response would be A plus, it leaves. A comes back to institutional order flow entry drill. B is consequent encroachment or retap of the old high. C is 75% of that range or that BISI, and a D is a full close of that. It's got to just tap it and leave though. And it fails if it gets below that. If it fills that, goes below it, comes back to it, then we've got a change in direction. That's why it fails and says, if I close below here and come back into it, this now becomes the reversal, right? For the continuation down from box to box. That becomes the new premium box to the discount box. Does that make sense? That's why I developed that rule around there, why it fails, because now that becomes the potential short. And you may see wicks get through there, but you want to see a body close below there. If a wick gets through there, it's one of those D- type trades. You just barely pass. You got a 50% pass on that. Because then if it starts to wick through that, you say, well, what are you aiming for? Am I aiming for half this wick? Am I aiming for that body's open? Am I aiming for these equal highs? That would be a nice little retap of the breaker here that takes out these lows. I'm looking for here, 50%. Yeah, I guess I can allow for a bit of wick action coming down there. So there's where the flexibility of your D fail rule. You're either 100% ones and zeros, it failed, and you wait for market structure to get back above that, come back, tap it one more time, and then go get in sync with the market. And don't worry about that fear of missing out crap. Just, that's my ones and zeros, man. So I want to see that forming here. So that's that rule for the rules I have around. And if you missed that, just go back over the tape. The tape. We don't use tape anymore. Go back over the digitized session here. So we're looking for, see how it's just kind of sitting here and not ripping out of here? I want to see that hold, a little small candle here, and then the next one act as my rules for continuation. Now here's interesting. This is kind of interesting. More advanced way of looking at this, if I want my A plus setup, and I want this just to leave, I don't want to see, if that stops right there in the next 2 minutes, if that stops and that just becomes a wick, I don't want to see more than half that wick get taken and then leave. So you get down to a 1 minute or 15-minute chart, look at that level right there, and if it starts to go higher and you get confirmation on that, that's your A plus entry for a long. But it's not going to come back there. And if it does, your stop loss still sits down here anyway. Just means you're in a little higher. So I'll be looking for this wick, and I don't want to see that wick. If the wick gets taken, then we're looking for a deeper run into this level. And it fails if it breaks below there. Does that make sense? That's what I look for continuation after range extension. So mark that in the show is 1 hour or 113 minutes into it. So about 1 hour, 105 minutes into the show. Note that if you want to review that on your the rules for range for continuation. So next 36 seconds, watch. What are we doing over here still? See, do you still want to play in that crap? No, thank you, mister. No, thank you. Look at that. Retest. If you were looking at this one, if it broke through there, you go, I don't want that. I'll wait for us to come back through that and then retest it. It comes back through it right here, retests it again there, and then you can go short there. Discount box is hit. You want to see the discount box hold price now, which it's doing right there. Look at the bodies respecting that. How beautiful is that? And then range extension, pay yourself, and we're getting down into this box now. So crude oil is giving you a nice little indication for shorts and stuff. If you've been really studying this still and you're focusing on it, you'll find that those levels are still holding. They're still holding. and your the wicks are doing some damage, but they're still holding the bodies. Look at the bodies, man. Look at that level right there. I'll draw that sucker out here so you can see it right on the beezer. That right there. Look at the bodies respecting that. Look at that. Bing, 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 bing. All this. Tell me that's not a data point that's interesting. It's also that first little volume imbalance here too. Isn't that crazy? Crazy. I love it. Love it. But wicks do some damage. That's why you got to wait for the thing to finish and go, oh, that was a big green candle at one time. I'm on the wrong side of it. Wait for it to finish. I'm not on the wrong side. Wicks just did some damage. And now we're pushing into our next discount box. Meanwhile, back at the ranch, what do we get here? Pop through it. See that? Pop through that level. Literally opened below it and just kept going. Ran out the low. Discount box is down here. Little tiny one. Rejection block. And lows taken. Change in direction. Below lows that we've taken out. And I want to see if this level holds. It doesn't. It only holds from the top. You see that? We break through it again. Come back to down on top of it. And then we're looking for a run back inside that range. So that is another long. Or you wait for this body to close above here. It gapped down into it. And then went higher. Now you're looking for a bull trap to give way. And then start running for premium box, which is sitting right in here, this middle of the 5 minute. If that bull trap holds price right at 50% right there and rolls over, this level hasn't been, you may say that is a hit. For me, as long as it closes, actually that did close. So what's the close open on this candle? The open is 637. And the close is 639. So that closed above there, gapped in. That's a long. Inside this range, pay yourself 50, 62%. Internal range liquidity hunt, come all the way back up. So this is why that first trade model works so good, you guys. It works so good. Okay, so there's 50. Well, you would have been paying a premium. You want to see it get a discount, right? So you'd want to see it get below there and dig into this lower portion of this. It didn't do that. So if you decided to take that entry as the first, second, third, then don't just realize that you're above the 50% already. When you get to 62, pull it up to 50, pay yourself, pay yourself, pay yourself, pay yourself, pay yourself, and then wait for this high to get taken. If that holds, comes back down, this hasn't been hit yet on the discount side of it. So if we roll over in here, watch for this level. And now you have bull trap and you've got discount below 50% hasn't been hit yet. So to me, that bull trap's mean threshold, if it holds, which is still holding right now, I want to see this get tapped. If it blasts through 50% of this wick and hits this again, then I'm looking for a continuation inside the larger range up here. That next one there or there. So premium box is up around 79%. Craig's looking to buy crude again. Where would you buy it, Craig? You've swept the lows now. Where would you buy it? Give me your entry. Let's play on crude for a bit. Play on crude. If you're new to our channel, hit the like, subscribe. We're here for you every day. The like helps us out. And if you want to subscribe, we're here every day for you. No one's selling you anything. We're just here to try and show you how to read price action, like at very specific data points. And you'll know if we're full of crap. You'll know real quick. Stuff will fail for us over and over. We'll just keep constantly failing in front of you, and you'll go, ah, this is crap. If it's too much for you and you just like larger, longer range stuff, you miss the whole point of the show. We're showing you on a 1 minute chart just because it acts quicker. But what we're showing you on a 1 minute chart is no different than what we'd look for on a 5, 15, 4 hour, whatever time frame you like to trade on. If you can't read price action this clear on that level, then you're missing out an opportunity to really make your trade models sing. And you're missing out an opportunity to save on losses because you're fail safe. If you don't have a fail safe, which I'm sure most of you don't, you just have a stop loss, which for me is just a traumatic loss of your money. If it comes suddenly, it goes ripping through you like the markets can do sometimes. The fail safe is your true stop loss because you know that specific data point. If it fails, then you're going to close your trade out because you know you're on the wrong side of it. And that's a matter of digging into the charts like this every day, looking for precision, absolute precision. And if it fails, you'll see it. You'll go, it's failing there. Like you saw me take one a while ago. It's like, I'm on the wrong side of that. And it's going to take my stop loss. Let's pretend the stop loss was still there. And you, sure enough, you see it come back and take it. Because they recognize that you're on the wrong side of the market, inside the range that you're presently trading in. So anyway, if the precision doesn't sell you on the markets, I don't know what else will. So you're welcome to stick around, join us. So you see how we're in this small little range here. We've got this first little change in direction. I'm looking right here. So Craig, you're looking right here. Just bought it. Okay. You bought it. What level did you buy it? Just because it took the low out, or just because you're bouncing off of this level down here? Because to me, this is not a full buy side yet. Unless you're bouncing off of here and you're absolutely sure it's going to go from there, this lower time frame is not confirming that it wants to go higher yet. In my eyes, anyway. If you're looking at that and that's all you need to convince yourself, look at $60, $61, I'm in. I'll buy it. And I'll keep buying it all the time it's below $65 or $61. If that's your logic and reason, go for it, man. I'm not here to argue with you. But I don't see a change in direction yet until I see this bull trap here get taken to the upside. Then I'm a little more confident that we're coming back into this range. So watch this level. We have no candle closed above it yet for a swing. So if that just hits here, rolls over, and see how we've tried 2 attempts to get up there now? This bull trap's holding right at the rejection block here. It's holding. So now I want to see if we get a real hard push through here, get on top of that. Then I'm bullish with you. But you'll just laugh and say, I was already in a long time ago, senor. See how we've swept this low? And then you come back, find support at this to continue going lower. And you see how right now we've traded below that level and we've swept back into it and then went lower. You want to see this break through this level. Oops. You want to see it break through that level, find support, and then take out the high because you're inside the small range. You're already up in the premium. This isn't a discount. This is way up in the premium portion of this small little range here, right? So for me, you got to, not only have you got to tap this, you got to drive through that as well to get out of this cluster. So just wait and see. I hope you're right, man. Well, I hope you're going to pay yourself or protect your stop loss or whatever. But let's just watch to see how this level and this level act. There's a retap. That's nice. So far, you're starting to switch to bullish. Craig's like, I'm already there. I'm already there, senor. For some reason, I think Craig's Spanish or Mexican. There's the retap. Keep coming, Craig. Keep coming, buddy. Oh, you buy it's cheap. Swing low taken, swing trade. Here we go. So if you're looking for a swing opportunity, that right there is where your buy is. And you're really hoping that it gets above here. There's one, done. Now you're above that level. That's good. Now come back and find some support at this level. You do not want to see the mean threshold of this candle give way now. Just come back, give it a little kiss. $61.31. That's where you got in at, $61.31. Right here. Right on the bottom of the SIBI. You go, man. I hope this just tears right up in here for you. So far, you're bullish. You're right. It's bullish now. It's one of those, did you pay yourself here? Because if that ripped through you and came back down, did you pay yourself? Is there the rules around, not only is there rules around what you're looking for a setup, there's rules around where you pay yourself. And if it's really close, you say, well, I can just look up here. Greed is kicking in. You say, did I get a 1 and a 0? Did I break that high? Yes, pay myself. Stop loss moves to break even, zero stress trade. Let her run. Let her do what she wants to do. Aim for your higher time frame objective. Give it a little kiss here. Let's go. Remember, what did I tell you about the rules now? Go over the rules. What did I say when we break a high? This is a swing point. So when I break a swing point or a high, either way, it's a high, the next high, the next high. So this high, what do we say? We said fair value gap forming above an old high. Then we want to see it come back and tap it and go, right? So A plus would have been leave from there. A, institutional order flow, that candle would have been right there, A level. Now you want to see B level, which almost coincides with the 50% of the range. It didn't. See how it's going to C. Now it's coming back into D. We don't want to see this mean threshold get eaten through. So a C level trade, not a complete fill, was what we want to see. If it does go to D level, then that fills our BISI and comes back into 50% of that breaker here. Now you may say it's buried inside this one here. You could use those as well. That's fine. I was like the very first candle to the left of the SIBI, and I look for that as my support. See how you're right on it now? You don't want to see that kind of stuff. If this was super bullish, strong, you'd want to see the A plus, A. Now you're into B, C, D. We've just almost filled this thing, so you're at a C level. It's got to get out of Dodge now. We've come back to that candle. Get out of there. You're allowed to fill, and now you watch. You say, where's the wiggle room for a D minus? So you got that. So you got a C level trade. We ran out the high, pay yourself. Move your stop loss to here. Let her buck. Now you've got support off this candle, and you want to see that 12 seconds support price above here and use that candle's high now as support. Right down to a C level trade. See that? Nice. Graded response. What do we get on that trade? It's a C level, but it's still going. You're still bullish. Did that make sense? So when you follow those rules, what grade are you going to act off of? Are you going to wait for it to fail, or are you just going to say my stop loss is one tick below these two candles, so I'm just below the fair value gap here. My fail safe is right there. it came right to your failsafe and then left. Pay yourself at the high. Stop loss goes now here. You don't want to see it get retested there, right? Here's your premium level. You trade through it, come back into it, tap it, keep going higher. Oh, my eyes. My eyes are burning for some reason. Keep coming, Craig. I love season accounting. I love it. There you go. You got your C again, Craig. That's Pacific data points, man. Now you see how this, you want to see this act like a propulsion block. Use it as support and push higher now. And this one here, you want to see that get above here now. We've validated it. So you want to see it get above. Come back and use it as support along with the 6 a.m. candle as support to push higher. So this is where ABS's level of support wants to be inside this candle here now. Does that make sense to you guys? We talked about the rules over here in Bitcoin, I think it was, or gold. We talked about the graded response. And then you just manifest, you just saw how that graded response works, and we get a continuation. And now Craig is buying dinner for everyone. Beer's on you, buddy. That is exactly what we talked about for our graded response. See a piece left open here? Beautiful. Beautiful. Now, what kind of trade model are you using, Craig? There's 79%. You went to 50%. You paid yourself here. You hit 50%, move to break even. 62%, move to 50. 70%, notice it has not come back to it yet. 70%, you move to 62. 75, move to 70. 79, move to 75. And it's going higher. So as soon as it hits 88, has it hit your premium objective right there? It is so close. It's so close. It is so close. Oh, we got this guy here. Right there. Sorry. This guy is overlapping this premium. So you got to keep this in mind as well as a point to reject and come back lower. So look right there. And that's 61.57. Pay yourself. Now you wait. See here. Now if you're using Take Profit Model 3, you're seeing this here. Your stop loss will be sitting down here. Now you have to ask yourself, are you willing to give up all that profit inside this range, being up in the premium portion? Here's your discount premium. Above that 75%, you're in the premium now. So you've got yourself a, you've juiced lots out of the internal range liquidity hunt, and you're hitting off of a level you want to see potentially reversing. If we can get through that level and take out this little fella here as well on the support level, now we finally hit it. Right there. Done. That's the box to box. Here's your box to box. Done and dusted. Rejection block. Follow the rule. Pay yourself at the rejection blocks. Craig, are you loving this? Did you give me a thumbs up, man? "17 people. They're all bailing on us, Craig. They're all bailing on us, man. They don't care about our trade anymore. All right, Craig. Are you still in it? Or did you bail out? Now look for this little tiny level here, support, off of a support level. Looking for premium levels up here. So that's been hit now. because we're outside of this little run. So now we want to see, take the range. And what am I aiming for up here? The next one, it ran the high, hit the premium. See that right there, right on the money. Precision data point, hit it nicely. So now I want to see this hold price. I want to see a body close above here. Now we have no body closing above it yet. So this little bull trap, you can get wicks get up in there. I don't know why my eyes are burning right now. Oh, looking for, ideally you want to see a body get above there and then the mean threshold of this candle hold. And what do we want to see above an old high? We want to see a fair value gap form above, not below, not below. I want to see it form above. That's stronger for me. If we're going to come back into this, find some support at that. See how this now, if you're going trade long and you're using take profit model 3, nothing has showed you a violation yet. So you're still sitting in this long. We have not got take profit model 3 right here. Stop loss is sitting right here right now, because that is your next place for it to fail, right? If it trades, we've taken a high. If it trades through here and comes back into it, it's failed. We're coming back down into that range. Does that make sense? So if you're paying yourself on the way up, or you're just using a take profit model 3 from this point, you say, I don't care about all this stuff. I'm in this long. I want to see it run way up here. I want to see $100. You stay in that now until you see it break in market structure, or a BISI that is broken to the downside. Take profit model 3, my friends. Write the rule down. And you have to ignore all that other stuff that we've been talking about and stick to your model. If you don't, it's the psychology again. It's not ones and zeros. So you decide what profit model you're going to use. And again, those are just mine. You decide what you like. Have a great day. See you tomorrow. You're out of here, Hadi. Done for the day. You're welcome, buddy. Sorry didn't get anything decent in there. It looks like a whole bunch of crap. It's not one to play in. That's why we've been playing, going elsewhere. That is just buzzsaw. Much cleaner action, hey? Look at that. Bitcoin. How's Bitcoin? Look at Bitcoin even. Change in direction right here. Body closes. We talked about this particular entry, so you wait for a body to close above it. Right here. See that? And then what do we say? I'm going to draw this out so you guys can see this over and over and over again. You need to see this. Wait for the candle. Wait for the bull trap to fail. This is called the breaker. Do we get a candle close above it? Yes, we do. Do we come back and find support at it? Yes, we do. And look at the run on that baby. Right there is your perfect entry for your long. And what did we reach for? Premium box, way up the top there. And we're through that. And we extended the range, ripped all the way through it. Now we're back through this level. And now if we find support at this, right there to there, and roll over and it keeps coming back down, what am I aiming for next? Looking for this, old highs, 50% of the range in here. These are all up close candles. That is a beautiful run. Now, if you, let's say you're going to do that take profit model 3 right here. If that fails right there on the downside, close your trade off. That long from there to there is your run. So from 124,789. So 789. If it fails right there, 789 to 202. That's 3, 5, like 400 and somewhat handles. Huge. But right now we're still going higher. This is still supporting price. That's what you want to see. Is it break above, come back, find support at this level, and keep pushing higher. And so far, so good. Let her buck. Stop loss is sitting just below either that level there or this one here. I would have her sitting below here. Take that, sit below there, And now you want to see it get on top of this candle and use this as a propulsion candle. Drive that higher. That's a one and done for the day, man. For you on a 1 minute chart in Bitcoin. Anyway. Right there, if it closes below there and you're using your entry here to go long, this is the same kind of thing we're talking about in Bitcoin. If you see a close below here, this is the same thing for using a take profit model 3. If that closes there, you got to wick through it once, twice. Again, the rule is watch in the next 3 minutes. See how it's going a total down candle? Is that scaring you right now? If that closes and trade comes back in, it close out your trade. So you've got a long here, you're out here. Or you might be ballsy and say, if it trades back into that level, I'll close out, juice a little bit more out of the orange. So where it opens, again, here's another set of rules I have is if wherever it opens, you want to see it start going straight back up again. If it comes back to the open and taps the open, then you close the trade out. If it instantly starts going lower, close the trade out. So it's literally got to be a flat candle going straight up with no wick down. So there's even rules on how to get out when they're on the wrong side of it. So 2 minutes and 42 seconds. So we'll kind of watch to see where this candle ends and whether your take profit model 3 is done and dusted right there. Meanwhile, back in Bitcoin, we're still making a killing off of our little earlier trade. Delish. Sorry, it was right down in here. 789. See it was 789. And you're up at 389. So you're already 500 handles in already. What's your bias on DAX? I could miss if you been analyzed already. Oh, I haven't even looked at DAX yet. I'll look at it right now for you if you like. Stopped out crude, waiting. Okay, where's crude? Let me see what crude did. You're trying to short this again above a high? Or did you try to just trade that off of, I don't want to see a mean threshold of this candle. Now we traded above it. I don't want to see the mean threshold of either this cluster or that candle get taken on the downside. It wicked, did lots of wick damage, finally closed below it, comes back into it. You're out of your trade. And then all you do is just wait for it to get back up on top of that. Okay, let's have a look at DAX. 16 people, they're all bailing. Nobody wants to play in here anymore. There's lots of trades out there, you guys. Now you can rest, Craig. You've worked hard today. Take a break, man. Take a bow while you're at it. Like, holy smokes. If you take the low here to the high right there and watch where that came down into in terms of that this bull trap right here. If you got these little imbalances that you got to find support at, see how there's one there, one there, one there. Use the whole thing. Look where we come back to 50% of it right there. And now you want to see that go higher. So my stop loss now would sit right in here. I wouldn't want to see that getting any lower or retest this at all. Start heading higher. I like that one, but because you got these imbalances and stuff in here, you've got to use the whole thing because there's too many little potential retracement points it can get into, like data points it can reach into. So use the whole damn thing. Look for 50%. There's 50%. Hold it. Get on top of this. Keep pushing higher. And I'm looking for my next box, which would be right here. reach for that crude oil there. Bitcoin, what were we looking at? I think it was it DAX? Oh, DAX. Let's do DAX because we said we're going to do DAX. I had it's a Disney. I was going to say, what? Disney's still sitting in that mess. It came up into the premium, ripped all the way through, downside, came back in, found support off of the 4 hour, and now we're pushing for lows. We've hit, see how we're hitting key levels here? Look at that. Man, they're using those data points to keep pushing that lower. That's good. I want to see Disney get way down in here. Let's get an $80 trade again, because Disney will be a 40% return on your money, or at least 20% return on your money. We can get back down into that range. Oof, delish. And it pays a dividend of, what is it? 50 cents every quarter on every share. Not a lot, but whatever. Oh, sorry. Let's go into German DAX. Ali wants to know, oh, look, we hit my first standard deviation. Nicely. Nicely, nicely. That was the next objective. Oh, we nailed it. Okay. So, sorry, Ali, we're stuck between my 2 points I gave you the other day. Did I give you these in the Telegram channel? That is an upside, and this was the objective to reach for on the downside, and we hit that, and now we're back inside this range. So I got nothing for you, man, here on the hourly anyway. On the 4 hour, let's look at the 4 hour. Right now, you're stuck inside this little zone here. What can I give you here? Okay. 4 hour. So that came down inside that busy. Hit it. This is that graded response. You want to see this hold right there. Not this ugly wick. Like, look at all that damage it was doing. Now running through the first one, running through the second one. Filled the second one and still did more damage into here. But the bodies finally came back and closed there. Psychological damage. If you're on the lower time frame charts, you're seeing major run through support levels, and yet it ends on the hourly. It says, nope, I'm just going to stay right on my level there and then start running all the way back up into that premium level. Hit it. You even wick through that one. And you're looking for any opportunity. Once it comes back in here, you're looking for an opportunity to go short, short, short. Then you're looking for a short. So you're looking for any opportunity to go short here. So look in this candle for a reversal on the 1 hour chart. So there's the 1 hour chart. We're looking for a reversal on that point on the 1 hour. I don't see right here. I want to see if we can get through this one on a close and come back into this level. I want to see that continue to push lower. Inside this range, where am I? So you ask yourself, am I going to get a discount to trade internal range liquidity? So you want to see it trade below this on a close, but don't hit 50% yet. It comes down, let's say it stopped right here, came back up. This candle opened, came back into that level. Now you can say, let's go short for 50% of the range, pay myself here, move to break even, and then start gunning for mean threshold of this candle. Because really this hourly candle, it's high, it's open, and it's mean threshold. It's already through 1, 2. Now we're looking at the third one down here already. And we're so close. And this hasn't been triggered yet. So if we lose the mean threshold of that candle, come back into that, look for a further run down into the wick. You want to see this low get taken here. And then use this BISI to start leveraging this wick, and then take the wick out and start running lower. So kind of an odd situation here. This hasn't been hit yet. So if we finally get that, then you look for an opportunity on the 15 or 5 or 1 minute alley for a reversal in here. So I'm looking for anything in here that would show me a chance to catch a short for this mean threshold. If we can get through that mean threshold, look for support, look for it to come back, tap it, and then look for support for it to continue going lower. Target this, then target the wick. Break it into quarters and start targeting that. And if you get through this level or market structure shift and we start using this wick as support, like you don't want to see any more than 50% of that wick, or at least the bodies of the candles, you don't want to see break 50% of that wick. You want to see it in the lower half of that wick there. So if we have a, for example, if we get down into here, what you want to see is the bodies of the candles, the get wicks coming back up into here. It's fine. But I don't want to see the bodies break through 25 to 50% of this wick. You want to see them holding on price, and then you just let that sucker run all the way back inside here, aiming for hit these lows next, this low, and then targeting each one of these bissies on the side there. That's in an hourly chart. So in order to get that, you got to wait. Right now you're stuck right in the middle of this whole range here. You're at 50% of the range. Can you pick a direction? I can't. I know what I want to see, but whether or not you get that, you're going to have to wait quite a while for your setup to occur. That's all I got for you there, Ali. Ask me again in a couple of hours, like after lunch. Look at it again after lunch, because right now you're just in the middle of the range. So I've got nothing down here except the mean threshold, and I got nothing up here except this premium Bissy. That's all I got. How's our gold doing? See how that, this is beautiful. You see, look at that right there. Still holding price. You want to see that keep climbing. Now, if that's closed on it, opened here. Now, what's your rule? If it opens below that level, if it opens below the level and starts to, and then started climbing or dropping lower, close your trade out. Your take profit model 3 is done. Now, if you're getting upset because you're seeing this run higher, you go, I could have made money on that. That's emotional. Stay out of it. Don't think that way. Wait for this to close. Come back, use this as support, and start pushing higher. Get back in sync with the market. Otherwise, if it's trade below, trades above, you can take it once. And if it starts to trade below it again, wait for that structure to break, because you're just going to get beat up inside a bull flag here. And if it is bullish, let it run up there, create the fair value gap, institutional order flow entry drill for continuation. The scary one you're going to see is if that shoots straight up and you go, oh, I missed it, fear of missing out. That's all psychological crap you don't want to bring into your trading. You go, oh, that's exciting. Good, good. I can get back in sync with it going higher. Not, oh, I missed out. That's just the wrong negative crap to feed your brain. Good for you, Ali. I think that's going to be it for me as well. Anybody got any questions? Anybody want me to look at anything in particular? We get a couple of little wins today. Any questions? Anybody want me to look at anything, a stock or anything as well? You're getting into October now. October, November is usually a good stock pick time for a run into the new year. That hit our upside objective we were looking for. Done and done, man. Look at that. Right to the consequent encroachment and then reject off of it. How delicious and nutritious is that? That was our target. Lush. Lush and lush. Look at that. Discount box. Bounce off the discount box. Premium box inside that range. Bounce off of that and start coming back into this discount box here. Let's put one right here now. All the time that's holding, look for this. We'll see if she runs down into that little box right there. Oil, look at that, smash mouth. Right into the premium level. Look at that, consequent encroachment. BAF. Let's see it break through here. Market structure shift here. And 11 o'clock, 11:45 lunch hour. Let's see it take a nice little run through this liquidity. Watch it take here. Then you got these little tiny imbalances. Market structure shift and look for a run back down in that range. Yeah, anyway, that's it for me, you guys. Thanks for tuning in. I will see you guys tomorrow. Keep your powder dry. Keep your stick on the ice, you guys. Be nice to each other. Hug a fireman. That's what I say. Hug a paramedic. They're working their ass off for you out there, trying to keep you safe. Take care of you. Thanks for tuning in. I will see you guys bright and early tomorrow. And my eyes are burning, so I'm done. Thanks for everyone. Thank you. Let me just put in here. Everyone, don't forget to subscribe and like. I love you all. Take care, man. As usual, send in the love. Send in the love, my friends. Send in the love. See you tomorrow.